Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hello everybody, Ben Rains here for top stock picks here at Zacks. Today I'm looking at ON Semiconductor, which trades in the ticker ON. ON Semiconductor was originally a spin-off of Motorola in the late 1990s and is focused mainly on growth areas within automotive and industrial markets. ON Semiconductor's intelligent power and sensing technologies support industries such as electric vehicles, connected vehicle technology, industrial automation, sustainable energy grids, cloud infrastructure, and beyond. The company completed its purchase of GT Advanced Technologies back in November, and the firm is a key supplier of crucial components needed to manufacture EVs, chargers, and more. ON is also focused on boosting its margins and continuing to exit low-margin non-core products. With this in mind, ON posted its best top-line expansion since 2017 last year, with its adjusted fiscal 2021 earnings up 250% on the back of 28% higher sales. More importantly, the company provided upbeat guidance in the face of global supply chain setbacks and chip shortages. ON then lived up to that guidance and more when it topped our Q1 earnings and revenue estimates on May 2nd. The company posted record quarterly revenue with sales up 31%, driven by strong demand continually from that automotive and industrial customer segment, and its adjusted earnings climbed another 250%. And it's now topped our adjusted quarterly earnings by an average of 20% in the trailing 4 quarters. ON also raised its guidance to help lift its 2022 and 2023 EPS estimates even higher. This helps it land a Zacks ranked number 1 strong buy at the moment. And currently our Zacks estimates are calling for its earnings to soar 66% in 2022 on top of last year's massive jump. Meanwhile, its revenue is projected to climb nearly 20%, with more top and bottom line growth than expected in 2023 as well. In terms of its stock price performance, the stock has crushed the broader Zacks technology sector over the last 10 years, with it up 600% versus that sector's 323% climb, and it's matched the larger semiconductor space as well. This run includes a 235% climb in the last 2 years off those COVID lows to blow away its semiconductor industry's 50% climb. Obviously, the stock has fallen back from its January peaks amid all of the selling so far in 2022, with it trading about 20% below its January levels, around $52 at the moment. The stock's current Zacks consensus price target, though, we should note, marks 35% upside to its current price tag. And then on the valuation side, ON is trading at 10.3 times forward 12-month earnings, which marks a discount to its own 5-year median and 65% value compared to its own highs, and a 25% discount compared to its highly ranked industry. In fact, it's now trading right at 2-year lows and its lowest level since the initial COVID sell-off. Wall Street's also really high on the stock, with 12 of the 18 brokerage recommendations that Zacks has coming in at strong buys, and its semiconductor analog mixed industry is in the top 7% of over 250 Zacks industries at the moment. So ON might not be the splashiest name in the chip space, but it's poised to grow by supplying key components in growth markets, and it might just be getting started. And that does it for me. Now I'm going to send it over to Kevin Cook.
Thanks, Ben. My top stock pick for the week is Cadence Design Systems. I've called them the big partner to NVIDIA you've never heard of, and we're going to dive into that today. So let's start with the price chart. We are in something of a bear market for a lot of technology, but there's a bright side here with Cadence, actually, because look at the support the stock is finding here, just above 135. This goes back to the early market sell-off into February. And I'll compare it to the SOX index coming up. But the fact is that the entire semiconductor sector is doing worse than Cadence. So in other words, Cadence is showing relative strength. And we'll take a look at that shortly. Let's first talk about why it's showing some relative strength. And that was after its Q1 report. Nice beats here. Earnings beat of nearly 16%. EPS was up 41% year over year, and revenues for Q1 of $900 million beat the Zacks consensus by 5%. So that's a real nice beat, top and bottom, and that was 23% growth year over year. So top line benefited from continued strength across all segments, driven by higher demand for Cadence. Now let's back up. Let's recall what Cadence does. So Cadence is in the business of EDA, which is electronic design automation, and SDA, SDE, systems design enablement. This is the software that chip makers use to design their chips. And I always mention them in tandem with NVIDIA because they are a key partner for NVIDIA. If you've ever watched Jensen Huang talk on his keynotes at the GPU Tech Conference, he talks about simulation, how not only does NVIDIA build tools so that companies can simulate anything they want to, but that's a part of the NVIDIA design culture, to simulate everything in the design of a GPU chip or system first. And Cadence helps them do that, and that's why they are key partners. Now, Cadence is not cheap right now. We'll take a look at the sales and earnings estimates here, which are healthy. We're looking at nearly 14% revenue growth this year to $3.4 billion. Next year, estimates are showing 7.6% growth to $3.66 billion here. So if you're talking about a $40 billion company, the price to sales wise, the stock is trading over 11 times. That's not cheap, but it tends to trade also in tandem with NVIDIA. NVIDIA is a chip maker, a very specialized premier chip maker for data centers and artificial intelligence and gaming, that has commanded a mid-teens multiple price to sales for years. And Cadence seems to be in that valuation category. EPS wise, we're looking at 18% growth here to $3.90 roughly, and next year is still projected to be 10% growth to cross $4. Again, we've got a stock here trading over 30 times EPS, just like NVIDIA, but it seems that that's what investors are willing to pay. And so let's look at some of the analyst reactions to the quarter. I just made this quick slide here for Cadence, and I've got 3 analyst reactions here. Up top is KeyBank. Jason Celino noted the Q1 revenue beat and the bump in guidance. So, we got the beat and raise quarter again from Cadence. And so the revenue guide for 2022 is, took up the midpoint over 50 million to roughly 3.4 billion to 3.44 billion, we'll call it. All right. At Baird, we actually saw the price target get lowered to 203 from 211. Right. That's still pretty optimistic. The analysts there kept an outperform rating on the shares. And, what this analyst pointed out that he liked was the recurring revenue increasing 19% and upfront revenue is increasing 49%. So, of course, the raised guidance had him raise estimates, and he really likes the backlog development. Semiconductors are a lot like automobiles or any other heavy equipment, that requires CapEx. Is you're looking at the backlog of orders. There's a long product cycle where you want to see that healthy backlog. All right, and the last comment here I want to share is from the Needham analyst, Charles Shi. He said that this quarter was impressive, in spite of the macro headwinds, inflation, and a possible top in the semiconductor cycle. I mean, that's why the Zacks is down so much. We'll look at that chart in a moment. So he thinks this is pretty impressive. This is another key thing that I like that he points out here. So she observed in his recent conversations with investors a growing interest in EDA stocks like Cadence. Again, EDA is electronic design automation. He sees it as a potential hedge against a recession and the semiconductor cycle. So that's an interesting view of Cadence there, that they are relatively immune to inflation or recessionary pressures and the semi cycle because of their software niche in design, which, these are the tools where semiconductor manufacturers, whether it's Intel or even the foundries, are looking out in their product cycles, 2, 3, 4, 5 years, especially as things go under 10 nanometers. You need these software tools to design the architectures at 7 nanometers, 5 nanometers, and we're starting to talk about 3 nanometers now. So that's what makes Cadence Design System software so important for that build out. All right, so let's. I told you I was going to show you the Zacks chart. So here again, here's Cadence. Finding some support here. I think it's a buy here under 140. With upside to, if we come out of this mini bear market in technology, this stock could easily get back to the old highs. And by the way, I put investors in this stock last year at 140, 150, and you saw it get up there to 190. So you had a chance to capitalize on that, and it was the same theme. I just said, listen, this is a key partner for NVIDIA, and that's why you want to understand the technology and see them as one of the top players. So here's the Zacks index, breaking the Q1 support that it had at the 3,200 level. So there, and that was pretty significant support. So this illustrates the relative strength of Cadence. So definitely put this stock on your radar. If you don't want to step in front of the current meltdown, look at the options chains and consider selling some near-term puts. While volatility is high, you sell a put down here at the, whatever strikes are available, say 120, 125, 130, and you capture that premium, and then you get the opportunity to buy the stock even more on sale if you get assigned. All right, so that's my view on Cadence and the opportunity right before us. Hey, thanks for joining me in our top stock picks of the week. Before I go, I want to mention that we have a promotion this week for the Zacks Investor Collection. And this is a really cool grouping of some of our portfolios, including the Value Investor, which is a phenomenal portfolio run by my colleague, Tracy Reineck. Home Run Investor, run by Brian Bolin, also knocking it out of the park. You also get the Income Investor and Stocks Under 10, also run by Brian Bolin. So check out the offer this week for the Zacks Investor Collection. All right, talk to you soon.